Hello and welcome to this Filmgraphs podcast on Dukascopy TV. Today we're going to present something new. We're going to present price projections derived from our methodology. These are automatic with a IE-like process which replicates the way we interpret our charts. Now you know our traditional way of showing things on filmgraphs.com with a weekly graph, a daily graph, and an hourly graph, and our trend analysis, which basically gives us direction, as well as our targets analysis for the target, for the risk reward and the price potential, and our risk index, which basically gives us a measure of risk from oversold to overbought. Now, for now, Bitcoin, in our view, is still uptrending and probably into the spring. Here, the daily graph shows us that it can make it up to early next year, while the hourly graph is currently in a correction, which doesn't seem quite over yet and may extend over the next week or so. Now, to do our automatic projections, we've relied on a more seasoned platform, the Decider, which basically uses our oscillators to project possible scenarios into the future. We do it as such by overlaying model sequences of our oscillators on the current status of these oscillators. So you can see that our oscillators, on our medium-term oscillators, are currently in an uptrend here, and that this uptrend probably extends into early next year, while on our long-term oscillators, we could see them extending into late January. Well, over the last few months, we've automatized this process. And the machine is now doing the job of recognizing the sequences and projecting where the oscillator sequence should be over the next few months. We then convert this, using historical volatility, we convert this into a price projection. Now we do so on Bitcoin, for example, here, but we also go into the market to try to find other assets which have a similar position that Bitcoin, be it on price or also on our oscillators. And in this case, we found good correspondence with the US to Europe 10-year interest rate differential to the inverse of bonds. So Bitcoin seems to be correlated with long-term US yields, as well as with inflation expectations. Now we take these related projections, we take the projection on Bitcoin, we weigh them about 50-50, and this results in a price projection. So what you have here is that you have Bitcoin with the historical price here up to this point, which is today, and then a projection into the future where we expect the price of Bitcoin to go. And in this case, it seems like we're in a correction, which is almost over, and that we should cross into a positive territory or a positive trade, which should lead us up into perhaps late January, perhaps early February, and towards 80,000 on Bitcoin. On the right-hand side, you have the historical correspondence of the models we identify with our ideal model. And here you have the pertinence of the cross-asset confirmations, meaning that does the projection on Bitcoin really correspond to the projection on related assets? And then you have the possible max upside potential, which is pretty much here, and some downside risk, which we will calculate here over the next week or so, and then again into the future once Bitcoin may have topped out this spring. We do the same on ETH, which seems more resilient to the upside. We could see that we are continuing higher into late January, but will probably extend into the spring and possibly up to 5,500 here. And finally, we just wanted to look at the ratio of ETH versus Bitcoin, and it does seem in quite a strong uptrend, which also extend into that April date and possibly up to almost a 40% outperformance. We thank you very much for your attention, and we wish you a very good week of trading.